So yes, you've seen that right. I'm going to break down our simple strategy that we teach within our bootcamp, within our courses, in our private community. I'm going to break it down for you, the very, very simple steps that you need to look at when you are looking to trade. I predominantly trade Bitcoin, so you can see exactly what I'm going to show you on the charts is trading Bitcoin. But this strategy works for all your Forex pairs, all your indices, as we also trade the ES and the NASDAQ as well. So welcome. I hope that you find these videos informative. I'm going to get straight into it. I'm going to break them down. But before I do, there is a free journal for you to obviously journal your stuff on the Notion template. Hit the link below. You'll see it's a free journal. All you need to do is put 0 on the Gumroad page, and that'll be emailed to you straight away. So make sure you go and get that free journal, because without a journal, you're more than likely not going to succeed in this industry. So this is the T1 plan. The T1, I just call it the T1 because of 10 Wealth Group. It's my main strategy and how I break it down. It's allowed me to go full time over the last 2 years into trading, and obviously help other traders develop their trading from beginners to the end, for them to obviously get funded and obviously move on and move from their lifestyle now to a lifestyle of freedom and location. So, should I say location and financial freedom? So, just going to get into it, no editing, etc. So, what you've got on your screen right now is the BTC chart on a 1 hour term time frame. Now, I do enter on the lower term time frames, but for educational purpose, we'll keep it on the 1 hour term time frame for you so you can understand it without the noise. So, the first thing that I want to break down is we're going to go on the 1 hour term time frame. So as you can see here on the T1, I've got the 1 hour term time frame on. That's the first thing. We're then going to only risk 0.5 or 1% maximum of our capital. Okay. There's some people out there that want to go to 2 or 3%. Some people risk 30% to trying to flip accounts. We're sustainable. We want to trade for as long as possible, and we want a career in this game. We don't want to flip accounts and start flexing. We want to have this as a sustainable source of income, which will give ourselves and provide for our families as leaders. Okay. And then with this strategy, we're going to monitor the trade. On the higher term timeframes, you don't really have to monitor the trades. And I'll show you a higher term entry model in another video, very, very similar on the 4 hour term timeframe, where you can just wait for that level to hit and then move to the downside. But with this one, we don't really want to set and forget. We really want to kind of monitor the trades, whether we're away from the desk or our laptops or wherever it may be. As long as we're looking at this maybe on our phone, we've already entered the trade. So for me, I think you should be monitoring the trades if you're looking on the 1 hour term time frame. Okay. And the steps are very, very simple. The steps are, we're going to wait for major levels. I'm a massive advocate of you waiting for your levels. So that's resistances, that's dailies, weeklies, support, whatever it may be. I'll break that down in another video, but that's also in the course. The course is now being updated with everything, and it will be all in one package for you. And the 12-week program that everybody's been waiting for will be available maybe 2-3 months, maybe even earlier, depending on the schedule. So look out for that. And that's where we break down where you can get your major levels. But for today in this short video, I'm just going to quickly give you a support and resistances. Okay. We're then going to wait for a break of structure. Okay. Now, this is very, very simple. Many people have seen it on Smart Money Concepts, for example, and Smart Money Concepts, you're waiting for an order block. And to be fair, our strategy, the Fibonacci levels, line up with the order blocks. So it's a less complicated Smart Money Concepts. It really, really is. And that's what you're waiting for. So you're probably familiar with that. And then we're going to look to enter the market at a 618 and a 65, all the way up to a 79 at Fibonacci level. Now, the 7.9 is your 0.786, but I like round numbers, okay? So that's 7.9. So you got that amount of room to be getting into these trades. It's very, very simple. And you're going to wait for the 1 hour candle close. And then you're looking for a 2R, okay? Don't think you should be greedy. Look for around about that 2R when you're looking to get into the trade. So let's jump over to the screen. So step one is we need to find out that we've got some resistances or supports or a major level, okay? And as you can see right here, I'm just going to put an horizontal ray. You can see that we had resistances at that level. You can see that we came up once. That would have been one of our major levels. You can then see that we came up twice as well from here. So this is going to be an interesting level for us, okay? So the first one that we want to do is very, very simple. we want to have a look. Once we get a rejection, do we then have a breaker structure? So remember, we've got our tick 1, which is our major level, which is already marked on our charts. We're then looking for a clear breaker structure. Now, change of character, you can use as a breaker structure, in my personal opinion. Okay, I do it because you may be too late, because a breaker structure would be all the way, for example, down here. Okay, so you might not want to wait that long. We had a wick down there, etc. So what I like to do is, you've got this change of character, which is just on your screen straight here. This will be your change of character section here. I like that as a little breaker structure that I say in the community. If I zoom in, you can see why that is a breaker structure, or a change of character, as they say in SMCs. So once we have that move to the downside, which is our breaker structure, we're then waiting for a market entry, okay? And what we're going to do, which is step 3, we're going to get our Fibonacci level, and we're going to take it from the high, we're going to take it to our last low. I must stress, people get confused. That's how high that makes this low, okay? Always remember that. So that's where we're going to pull our Fibonacci from. And then let's bring that across, because we like to bring it across. And we're waiting for our levels to be in this zone. Now, as you can see, we get above the 618 and the 65, and also the 71, which is important. But we spike up and close just above the 79, which is very, very important, just above the 79. We then close below that. That's given us the opportunity to enter a short trade. Simple as that. That's the strategy. That is the strategy that you're going to be breaking down for. Now, it looks very, very simple when I show you on here. And, you know, there's a lot more work that obviously goes into that strategy. But they're the fundamentals and the basics that you need to understand this strategy. Now, there's plenty of other things. Market environment, patience. You may bring your RSI and you may bring other confluences in with you. However, that's the pattern recognition that you need to be looking at when you're looking at our strategy. We keep it very, very simple because we want a mechanical system for you to learn how to trade without all the noise that we see around us, whether it's Twitter, whether it's YouTube, whatever it may be. We need a very, very mechanical way of trading, which means we need a process of steps. And if that happens, we execute that trade. Now, there's plenty of other things I can bring in: fixed range volumes, you know, value area highs, value area lows, point of controls, certain indicators, volume, those types of things. And they'll give you an indication when you get into those zones, whether it's going to be a grade A, a grade B, or a grade C trade. Okay. But those things are later on, and we show you in our community and how we trade, etc., and things like that. So bear in mind that this is the pattern recognition that you need to be looking out for. And if you do want to get involved in our Discord, head over. Nice community. We will be putting our public one over to school, but the VIP is staying on Discord at the moment, so you can get all the updates that I do in the morning. My trade ideas, as you can see here, this is our trade ideas. This was yesterday. Also our ES as well. Our obviously live updates once we do video updates, VIP chat where people ask questions, can book calls with me. I have a daily update of my thoughts in the morning. Great, great community. And I break down what I'm going through, what trades I'm looking at. Not a signals group. I don't believe in signals group. I think you need to be in the field to learn yourself. And if you like the sun, that's a nice sunny morning as well for you. So go and check the Discord out. Patreon is now reopened for members this year. Things will be changing with certain platforms, but at the moment, this is a great way to get access. And look out for the revamp of the course and the mentor program, which will get you from your lifestyle now to a financial and location freedom lifestyle. So let's get back over to this and let me show you another example of where we're looking at to get into this chart. So we look a little bit more for price action. So you can clearly see on the 1 hour term time frame that we're coming down to another area of support. You can see here, this is going to be an interesting area of support. That's your first area. We wick up and we don't get no retest straight away. But what we do is we come back down and we create another tap into this very, very important support. And if I zoom in, you can see why this is support. It's a small zone of consolidation before we move back to the upside. And that's exactly where we wick down into this zone. So number one, that's going to be our major level. Number one. Once we then hit our number one, what are we then waiting for? We're waiting for a clear break of structure. Now, we don't get the break of structure, as I always say, because some people might say in this video, that's not a break of structure. However, like I say, that change of character is the one that we're going to use if you're using SMC. But in the group, it's a break of structure for us because we sometimes go down to the 5 minute to even see that happen. But again, what do we want? We want a bit of a break, a little change of character. You've got this first high here. But for me, once we then break this then interests me as I'm looking for my number 3, which is my Fibonacci level. So as always, like I said, number 1, major level. Number 2, change of character or break of structure, however you would address that with your trading style. So then what are we looking for? We're looking for a Fibonacci. We take it from our last low. That makes our high, our swing high. And if you have a look, we just tap in to our 618 at this moment. Now, you may say, but it could tap in the 618, it could hit the 7. How do I know when to get in? Very, very simple ways. You have to then look at the reaction once you get into that level. So if you have some nice wicks when you get into there, then you enter on the close of the 1 hour term time frame. Again, as I mentioned earlier, there's other confluences along the way, but this is a very, very simple mechanical way, definitely on the higher term time frame as well, for you to get into a trade. And then you move to the upside. Now, what happens here is you come down, you don't get much of a move, and you come back down here. But what you don't do is you don't take out your lows. So if you get straight in, your stop loss is here, and then you'll be looking for that. Let me bring that up on a short position, a long position for you. If you get in here, you want some orders. As soon as you tap into that level, you can bring your stops down here, and you can bring that up. Now, initially, you've only got 1.3. But look what happens. Comes all the way back down, and then we continue and rise to the upside. And this continues for a very, very long time. As you can see, you can stay in this trade for a long time. We even come back down here and continue all the way up here. And this rides you up all the way to its current high on BTC at this moment in time. Now, with Forex is a little bit more predictable, a little easier to trade. It's more mechanical, but these strategies are exactly the same on your Forex pairs. And then finally, let me show you a third one as well. Now, as you can see, what do we always look for? We're looking for a major level. We tapped up here, and you can see that we've got a level. We then come straight back down to the downside. Yes, a change of character slightly, but the move is very, very fast. And then what we're doing, if I zoom in here, you can see that we are hovering within this section just here for a long period of time until we then break structure to the downside just here. You can see we've taken out that with a very, very important wick. So with this one, we then say, right, let's move to the downside. We're looking for a retest, but we don't get no entry. And the reason we don't get no entry is because of this imbalance candle just here. Huge balance candle, no entry for us to get into. But then what do we have? We then have a major level being hit again. We come to the downside, but look what's happened here. We have now broken structure to the upside. We've broken structure to the upside. So what are we waiting for after we bounced from a major level? You can see down here, major level liquidity bounce, break of structure. We're looking for a retest. We get our Fibonacci, step 3. We take our Fibonacci, and as you know, we come perfectly into that area and we ride this trade to the upside, as you can see. And we're looking for that 2-to-1. That's what we're looking for. Make sure we've got a long position. If we get in here, we bring it down to here, and we're looking for that long position. And that's our 2 over there. And as you can see, it taps in perfectly for that trade to the upside. So that's my simple way of trading. It's very mechanical, as I've said. If you want to get involved, make sure you head over to the Discord. It has reopened, and look out for those courses. Make sure you get your free journal below. Okay, it's very, very important that you're going to get your free Notion template journal below. They're the simple steps that allows us to trade on a daily basis in the community. As always, God bless, and I'll see you on the next one.